Welcome back to Candlestick Signals for today's market. It's August 27th, 2025. Buckle up, investors, because we're about to dive into a sea of green and red, where candlesticks tell tales of triumph and caution. In the next few minutes, we'll unravel the day's most significant market moves, decode critical technical signals, and equip you with actionable insights that could shape your trading strategy. From bullish Marubozu in healthcare to dark cloud covers in retail, today's market is a technical analyst's playground. So, let us jump right in and decode the candlestick signals that are lighting up trading screens across Wall Street. Our market snapshot reveals a day of cautious optimism. With major indexes trading relatively flat as investors eagerly await Nvidia's earnings report, market breadth remains robust, with 61% of S&P 500 stocks trading above their 200-day moving averages, indicating broad underlying strength. This positive breadth suggests that the current market rally has legs, supported by a wide range of stocks rather than being driven by a handful of mega-cap names. Now, let's delve into the candlestick structures that are painting a vivid picture of today's market dynamics. The day's key formations include the Bullish Marubozu, powerful signal of aggressive buying momentum, and KDJ Golden Crosses, reflecting strong upward price shifts in select equities and sectors. These bullish patterns were particularly prominent in the healthcare sector, where stocks like HCA Healthcare and Cosmos Health triggered both Bullish Marubozu and KDJ Golden Cross patterns. On the flip side, we observed bearish reversals such as dark cloud cover and bearish engulfing patterns at specific support levels in key large-cap names. These formations serve as red flags, highlighting areas of caution and possible trend reversals that savvy traders should keep on their radar. The healthcare sector led the charge today, posting an impressive gain of 3.2% and adding $47 billion to its market capitalization. The sector's bullish momentum was fueled by a combination of strong technical signals and robust fundamental drivers. HCA Healthcare, for instance, formed a textbook bullish Marubozu candle, closing near its daily high at 2:30 p.m. Eastern Time. This pattern, coupled with a KDJ Golden Cross, suggests that buyers are in firm control and that the stock may continue its upward trajectory in the coming sessions. The technology sector, while not the day's top performer, remains the focus of intense market scrutiny as investors brace for Nvidia's earnings report. The sector saw a modest gain of 0.8%, translating to a market cap increase of $31 billion. Throughout the day, many tech stocks, including AMD Broadcom and Taiwan semiconductor manufacturing company TSM, formed doji candles, reflecting pre-news indecision and setting the stage for potentially volatile moves in the wake of Nvidia's results. In the retail and consumer goods sector, we witnessed a tale of two cities. Coal surprised the market with better-than-expected earnings, triggering a bullish spike of 17% and forming a large white candle body. The stock hit its daily high of $28.45 at 11:15 a.m. Eastern Time, showcasing strong buyer conviction. Conversely, Krispy Kreme faced headwinds, with its stock price declining 7% and forming a bearish engulfing pattern. This technical formation suggests that sellers have overwhelmed buyers and could indicate further downside in the near term. The energy sector continued to face challenges, underperforming healthcare this quarter. Many energy stocks are showing reversal patterns under macro pressure, with bearish Harami crosses appearing in several large-cap names. The sector experienced a decline of 1.5%, wiping out $18 billion in market value. The day's low for the energy select sector SPDR Fund XLE was recorded at $92.30 at 3:45 p.m. Eastern Time, just before a slight recovery into the close. Turning to our technical interpretation, the combination of bullish Marubozu patterns alongside KDJ Golden Crosses strengthens the probability of upward continuations in stocks, showing positive earnings momentum or benefiting from sector tailwinds. This convergence of technical events is particularly noteworthy in the healthcare sector, where demographic trends and AI adoption are providing fundamental support to the bullish technical picture. We also identified Morningstar and doji patterns at key market indecision points. These formations often precede trend reversals and are critical for tactical trading decisions. For instance, a Morningstar pattern in a small-cap biotech stock could signal the end of a downtrend and the beginning of a new upward move, especially if accompanied by positive news or increased trading volume. It's worth noting that RSI levels remain mostly neutral across the broader market, reflecting an environment without major overbought or oversold extremes. This neutral RSI backdrop creates fertile ground for technical pattern validation. It's neither extreme sentiment nor overextended price action is likely to interfere with the natural progression of these patterns. Looking ahead, forward sentiment is cautiously optimistic. The broad market participation and increased AI spending are providing support to equities, particularly in the technology and healthcare sectors. However, macro risks loom on the horizon, including concerns about Federal Reserve policy independence, potential interest rate cuts, and upcoming PCE inflation data. These factors could introduce volatility in the coming sessions and may test the resolve of the current bullish trend. To summarize the day's key technical events, let's break down the major candlestick formations by industry capitalization in the large cap space. Healthcare stocks dominated with Bullish Marubozu and KDJ Golden Cross patterns, while big tech names exhibited doji candles, reflecting pre-earnings indecision. Mid-cap stocks, particularly in the retail sector, showed mixed signals with some stocks forming bearish engulfing patterns. In the small-cap arena, select biotech and emerging tech companies displayed spinning tops and Morningstar doji patterns, signaling potential early trend shifts. These patterns reflect the flow of capital in the market. Bullish setups are clustering in sectors with robust earnings or macro defenses, while reversals are more prevalent in industries facing strategic or macroeconomic stress. As we conclude our analysis, today's trading session is defined by a bullish technical bias in healthcare, marked by Marubozu candles and KDJ Golden Crosses. This technical strength, combined with favorable demographic trends and AI tailwinds, supports a positive outlook for select growth stocks in the sector. The technology sector stands at an inflection point, with NVIDIA's earnings seen as the key catalyst for near-term market direction. Conversely, energy and small-cap retail stocks are exhibiting cautionary reversal signals, suggesting potential downside risks in these areas. Traders and investors would do well to focus on sectors and stocks that align strong technical signals with favorable macro or earnings narratives. In this complex market environment, the ability to read and interpret candlestick patterns becomes an invaluable tool for navigating potential opportunities and pitfalls. As always, it's crucial to combine technical analysis with fundamental research and an understanding of broader market trends to make informed investment decisions. Stay tuned for our next market update, where we'll continue to decode the candlestick signals that shape the financial landscape. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.